right, good afternoon, everybody. This is Dennis Wilborn, the active trend trader. I want to welcome you to today's session of On the Radar Live Market Updates. It's been a very interesting day in the markets. We started off with a basically at yesterday's highs, approximately, and then Uncle Joe got on the TV to basically tell about some of his upcoming policy changes, especially with regarding things and some tax issues. Market didn't like it. It started selling off. It seems like the market right now is sitting on a precipice where it wants to react. It just doesn't know which way it wants to react in. It's basically very. I would basically consider it very without traction, no traction. So, hey, that's enough of that. Let's go ahead and jump into today's session because that's what we're here for. So the first thing I want to look at is the spiders. And if you are joining us on Instagram, on Instagram Live, welcome aboard. Glad you're here. If you do have a stock you want us to take a look at, just drop the stock down into the comment section and we'll look at that before we close up. I've got basically the indexes to do, and then I've got 3 different stocks, and I want to send a shout out first to Yellow Duck. That's the application that allows us to go on to broadcast onto Instagram without having to go through the Instagram live process itself. So that is really a good thing. And so let's take a look at what's going on. Yesterday I was talking about we had a very good bullish engulfing pattern, pushing prices back up. And it looked, for all intended purposes, like it was going to be a one-day reversal. And what do we get today? We get basically a downside push. And guys, the high of today and the low of today is outside the limits of yesterday's price action. So that makes it an outside day. Oftentimes when you're at the end of this isn't the absolute end because that would have been up here, but when you're at basically a point of inflection or where you can anticipate some kind of a move, oftentimes it'll be when you get an outside day, it'll be in the opposite direction of the other prevailing trend. What is the prevailing trend that's doing? Is up, doing sideways. If we break down from there, I don't know. At this time we just don't know. We did get a close below the 8. Second close below the 8. And oftentimes what happens also is you'll get a hammering effect, a jackhammer effect is what I call it, where you hammer down the moving averages until it slope over, and then then the price action slips down because the moving averages are no longer positioned to be able to hold them up as what you would call no longer able to hold them up as a level of dynamic support. And so what's the projection down to the downside? I'm going to give you 2 bits of information here. One is I took a Fibonacci extension, and we want to measure the last time it did a pullback, how far did it go? We grabbed that from this information right now. There is oftentimes symmetry within the market, so we then rocket shipped out of here, got up to another new high, and then there's a measurement down. The red line would be a 100% symmetric move. The line above that, 786% retracement would be the next level up. And so what does that mean to us? Well, that tells us that can be kind of the targets to the downside. Note that the 786 lines up with a prior breakout area right there about the 406 level. The other important question that oftentimes people is, well, when? And that's one of the reasons why I like to utilize the Fibonacci time extensions to provide us a ballpark of when. And how do we do that? I want to basically same I want to go back here to the same downtrend. This was the last pullback. I just click here on this is my Fibonacci time extension. And I cover the same data points, although what it does is it puts in vertical lines projecting out the time when the price action could turn around. Now, get rid of this one because that's tomorrow. I don't think it's back down. So if our price action target is down at somewhere between the 406, 407 level, and then the 100% retracement would be down here at about the 404. And specific number on that. There you go, 403.69. Then when do we expect it to happen? If it takes the same amount of time to get down, because that would be symmetry in time along with price, that would put us down there on the 26th. What day is the 26th? Monday next week. What about if it goes out to a 127 extension, which could be a possibility because it's kind of like that gives us a good ballpark for a timing position. And that gives us timing for, that would be on the 28th. So that's somewhere between next Monday and next Wednesday. If price actions do follow a symmetric pattern here, we can anticipate prices being down at the moving averages, or at the moving average of the 20-day moving average, or lower. If you've never used that kind of a the time Fibonacci extensions, over on my YouTube channel, Market Tech Talk, I've got a 2-part training series. One is on price action Fibonacci's, and the second one is on time action Fibonacci's. Combined together, you can pull together a nice little grid that gives you estimates of where things could go. So that's what we're looking at with the S&P. Next is the Nasdaq as represented by the Qs. A similar type situation. We had an excellent bullish engulfing signal yesterday. And then what do we do today? We basically sell off from just about the high to the low. We're back below the 8-day moving average. And there's, you could do the same type of thing here to track down to find exactly where you might go. And if you don't want to use the Fibonacci extensions, you can just grab hold of just a straight Fibonacci retracement. And go to your most recent swing high, swing low. And that would be here on the 25th of March. So you use that as your initial swing low. Go back up to 16th. And what's happening? Interesting. Price actions will stop at the 23% retracement. Now the magic fib box is down in this area here. That's where we anticipate things to come in. That's the observation that Charles Dow did many, many years ago at the turn of the 19th century, is that after a significant move up, strong move up, price actions tended to retrace somewhere between 1/3 and 2/3. Guess what? That coincides with the Fibonacci's. So on the Nasdaq, it needs to break down below the 35. Until that time, we're in, kind of the meat grinder, place where if we really can't buy the moving averages, like on the 8, because it's just slicing right through it, up and down. We'll see what happens when it gets to the 20. That may be a place where it stops. But if we break here, we may revisit either down here at the 328.87 level, or the 50% retracement at the 324.76, or you could get all the way down to this lower gap. See the gap here? That gap up, that whole range in there is a zone of support that could come into play later. Bill, I think that's you. And so that's it for the cues. Let's go over really quick to the Russell's representative, IWM. Again, IWM, what's it showing us? It's basically over the last few days, one, our range has gotten higher. Price actions, again, after a 3-day pullback, it looked like we had a nice bullish engulfing. That we did get a pullback today, back down into still above the 50. That's positive. However, it is just channeling here. Very typical for the Russell to do this kind of price action during this time of year. Typically, it will go on to I won't call it a hiatus, but it will be the least strong index during the spring, summer, into early fall, and then kick in for typically a big move in the October, November, December timeframe. Traditionally and historically, the IWM or the Russell beats the other indexes during the last 3 months of the year into the first 2 months of the year. So it doesn't mean that you're not going to find some good trades with the Russell and trading TNA and that type of thing, but it can be a little bit wishy-washy. So what's going on? Why is the market acting like this? Well, you may not like it, and you may want me to say, "Oh, Dennis, you can't really blame it on that guy." However, at some point, the tax and spend ideology will catch up with the businesses and could very well derail the economic recovery that has been going on, especially as we become hopefully less sequestered by the virus and that type of stuff, and the country starts to open back up. But Dow dives on Biden's checks, hike report, and climate pledge. So I am not saying good, bad, or indifferent, but the market has not liked what is, it's kind of maybe catching up, and people are starting to wake up a little bit, and they're not liking that. So let's go ahead and take a look at, so what I would call today, I would call it basically kind of a no traction. It's not a time to be chasing any stock. Try to get into it. Wait for good setups. The momentum right now is favoring either a downside move or at least a stalling type price action over the, who knows how long, over the next few weeks, days, months. And again, as I said, it looked like we had a nice one-day reversal yesterday, and that one-day reversal is looking kind of ugly right now. Now, what I'm talking about with regards to one of the things that I have taken in consideration is if I can get 4, 5, 10, 5 to 10 to 15% profits in a quick order, the market is volatile enough to give that to us really quickly. We want to be jumping on that. Here's a trade on SQ, but I talked a little bit about, and I posted it to my story on Instagram. As you saw, in basically on this day here, which was over the weekend, I said if I had drawn in the Fibonacci, I said if prices pull back into the Fibonacci in reverse at this level here, just above the 50, at the 50-day moving average, at the 50% retracement level, I want to be a buyer. And sure enough, we retraced yesterday, got in this trade about $240.50. It ran up like a bird dog. I mean, it took off this morning like a jet. Got up here to the 252 level. That was my first profit target to take, and that's about a 5% gain. And with the expectation, if we break out there, we're probably going to go all the way back up to 270 to 277. Target above that is 304. However, look what happens. It hit this higher level. That's sellers coming in. Now, that's to be expected because this candlestick right here, these candles that you see, these big red ones, there was somebody buying right there, and right there, and right there, and then they sold off. Well, are still a probably a significant amount of sellers up here who were buying right up at the top. And so they are basically wanting to get out of their positions. So those, that group of sellers needs to be reduced so then price action can force, pass on through and up from there. So just remember that there's a pocket of sellers sitting right there. And there was also a pocket of sellers sitting right there, and they jumped on it when it got up there close to those all-time highs. So that's that. Yesterday I covered, how are we doing for time? We're doing great for time. Okay, yesterday I covered a couple of different entities in the Bitcoin realm or the blockchain coin. One was MARA. I did not put a trade on this because as we were looking yesterday, we had a very nice bullish engulfing. Blow this up a little bit so you can see it. We had a very nice bullish engulfing yesterday. We had a bullish engulfing yesterday with the anytime you get a bullish engulfing, and it was following a hammer-like candlestick, and anytime you get that, you can potentially plan on structurally there should be a level of support right around the middle third of that candlestick. You can see today it sliced through the middle third and up down, which to me makes this level down here between 27, about 27.30 down to the 20, I think it was $24, about $23.90, $24. That makes that a level of support of greater interest to me. Now, why is that? Even if Marathon stays within this restricted, range, it's a heck of a range, folks. And if we can, if it wants to just stay lateral like that for quite some time, because from the bottom of it to the top, it's about 100%. So I'm not after per se a 100% move, but the Bitcoin and the blockchain and the crypto type opportunities are pretty significant, but we have to be really, really close. On this type of trade, what I'll do is I will put in an order. If my stop loss is greater than 5 to 6%, I reduce my order size, and I keep and then what I do is I will have my conditional orders fire off at the same time that will get me out for either a profit or a loss. That way I can make this a fire and forget kind of trade, and that's what we do with our autopilot trades all the time. Last but not least, I got two more. Just hold on a sec. Riot is the other one in this space that I'm interested in. Again, it's putting in a triangle with this is the lower low. And so what I did on this one is I said, okay, I'm not going to trust that midsection there. I want to get as close as I can to this, breakout area down here at the $34 range. And so what I'm doing is I'm trying to pick it up right there, somewhere about $36.50, $36 on a rebound. However, I have to be cognizant and I have to, let people know that right now, if this is going to move into a sideways move, that's great because it also has similar type movements, but we are below the moving averages. And we have a clump of moving average. We have the 8 to 20, the 34, and the 50. So that forms a pretty significant level of resistance. That would have to be, we have to get back up through if we take a trade down here. Now, if we did do that, let's say if we did get into a trade here and it does make it back up to the 50 day moving average, if it does make it back to the 50, okay, that's about a 28% gain, our targeted gain. The other one that I will just leave you with, and this is a stock that was suggested by the organizer of the Delaware Investor Business Daily group, and its apps. Looks pretty good. Really high rating on the IBD list. It's on the IBD 50 list. It pulled back into the midsection of today's candlestick, and I missed getting into the trade on this one by about 5 cents, and that's okay. We'll wait and see if it repeats itself again tomorrow. Again, midsection for the entry, and just below that low for the stop loss, and then a move back up to the $93. But we would take out a little bit of profits at the 50, take out a little bit more profits at 85, and then 93 for upward profit. So that basically does it for today, guys. Don't see anybody putting in any other stocks. And so with that, what I will say is thanks for joining us. Now, again, this is our last on the radar for the week. We do it Tuesday, Wednesday, Thursday, 1 p.m. Pacific time. Tomorrow, what I do is I do the how to make money trading stocks and options. That's goes at 11 o'clock a.m. Pacific time, 2 hours before the market closes. And it's a good segue. I've got Dr. Steve Farrar, who will be presenting one of his stocks. I've got Anil, the organizer from the IBD Delaware group. We're going to be bringing a stock of his own, and I'll have a stock plus a market review. And we wrap that all up in about 15 minutes. So until tomorrow, thanks for joining us. And last thing, this will be posted to the our YouTube channel, Market Tech Talk, a little bit later today. So aloha. God bless everybody.